Hi, I'm Roger Conrad. I'm editor of Canadian Edge newsletter and also Maple Leaf Memo. And what I want to talk to you about today is Canadian Trusts. This is a group that was very popular about a year ago. It's been through some rather hard times. In fact, I think it'd be accurate to say they've been through a trial by fire over the last year. First, we saw natural gas prices start to back off from the post-Hurricane Katrina highs, and that's continued over the past couple of years. Then we saw a change in the tax structure, which was scheduled for 2011 but had an immediate impact on share prices. And now finally we're seeing selling in the wake of the subprime worries in the United States and concerns that a recession in the United States would spread to Canada and therefore not only hurt the price of oil and the price of energy in general and hurt the energy trust, but also hurt trusts across the board as people start to bail out of what they consider to be riskier investments. I think the exciting thing, though, is that these trusts have now, the ones that have made it through this period, have really weathered a trial by fire that very few sectors have weathered in the U.S. or in any market in recent years. And what that means is the ones that are making it, that are increasing distributions and so forth, increasing earnings, have proven that they can make it in some of the most difficult market conditions. Very difficult to raise capital for them over the past year or so, and as well as a lot of pressures on share prices and in businesses as well. So the trusts that have made that, I think, have really proven themselves. I think there's going to be a lot of takeover activity there, particularly coming into the beginning of the year. But I think one of the main themes that people want to keep in mind right now, with some of the selling and with these prices coming off, is that you have a tremendous amount of stress testing that's already been done, so you have very solid outfits. But also, when people do start to lose some of their fears of recession, it doesn't mean the economy has to hit a bottom, but it does mean that people have to be able to see where the bottom is and get an adequate idea of where risk is. And when that happens, I think we're going to see a tremendous buying wave coming into these things, as well as in many other high-yield things. This has been a decade of high-yield investing, much as the way that the last decade, the 90s, was a big tech investing boom. So I think once some of the fears start to wear off, we're going to see a resumption of that. And again, that's going to benefit a lot of these trusts. Another thing that is very interesting, particularly about the oil and gas side, is that they've been selling their energy at much lower prices than are now currently in the market, and that's particularly pertaining to oil. Many of these trusts have been selling energy for prices under $70 per barrel, and therefore, now with oil pushing in the 90s and so forth, it'll have to come down a pretty long way. First of all, it'll have to come down a pretty long way to impact their cash flow in a negative way. So that means that these dividends that we're seeing, which are 12, 13, 14% on very solid stress-tested companies, are pretty secure at this point. And then also, if prices do stay up where they are, we're going to see some nice cash flow increases for these trusts as well. So I think it's a tremendous opportunity right now to pick up some of the stronger ones, such as Enron, which has just actually announced a deal with a company called Focus Energy Trust, a much smaller trust that was having a lot more trouble raising capital. Now they'll be together. Enron will be able to use its much greater capital base to explore and to develop the Focus base. Costs are going to come down. And in the final analysis, I think a really good case for much stronger cash flows going forward for Enron. And again, it yields over 13%, and it's in a very strong position regarding oil prices. They've been selling oil for under $70 a barrel, actually. So again, oil prices stay where they are. You've got higher earnings. Oil prices come down to a pretty great extent in the wake of some of these recession fears. Let's say things turn out to be worse. Then you do have a pretty nice cushion built in. So thanks for tuning in today. We'll look forward to next time.